Hey, how's it going, guys? Just want to talk about Gigacloud technology real quick. Q4 earnings. We're going to go through the earnings real quick, and then I'm just going to give some thoughts on like tariffs and stuff like that. So the earnings are actually fine. The market reaction was just a massive overreaction, a massive sell-off. I fully expect that we will see some recovery in the price over the next month or so. And if not, it's hard for me not to see this price not fully recovering. When you're trading at 5 times earnings, that means literally in the next 5 years, you're going to make a full return on your investments, unlike just like earnings alone, right? So you will make a full return on earnings and cash flow in the next 5 years if they can maintain their business, which I think they'll be able to do. Personally, I think they'll be fine, but I guess we'll have to see there. I also mentioned they have $300 million in cash on their balance sheet. So, it's at this point, it's like it's so cheap. It's almost kind of hard to go wrong in my personal opinion. Maybe those are famous last words. So, their revenue declined from the previous quarter, and their growth has kind of slowed down. And part of that has to go back to Noble House. They basically just said they're transitioning to more profitable unit economics in Noble House, which means they're selling less of like items that just weren't making them money, which is actually a good thing. So in general, with Noble House, they're break even now after last quarter. So we should see margin expansion and better profitability going into next year, which is something management's been pretty honest about. The other thing about profitability is they had margin compression on shipping because they had pretty bad spot rates last year as well. So now that they're bigger, they're doing better volume, and shipping rates are a little bit better. Going into next year, they should also have better margins as well. So for this year, I say next year, I'm like going next year, 2025, revenue doesn't really need to be that much better. Like if they can just maintain it, they will be more profitable just through margin expansion. So that's just like general TLDR what's going on with the business. A lot of their KPIs were really strong. I love to see that their sellers are still increasing pretty aggressively. I think it was 8,000 last quarter. So, we just saw a 10% increase, a little more than 10% increase quarter over quarter for their active buyers. And I don't know what's going to happen here, but it's possible this will continue to grow quite aggressively. People look at tariffs being bad for Gigacloud technology, and it is to an extent. But if you're trying to source furniture from other parts of the world, they don't just source from China. They also do a lot of stuff from Southeast Asia. So I don't know what's going to happen, but it could be weirdly be a tailwind for their business if people start coming to them to source in other parts of the world. And of course, if you're a seller in China and you don't want to sell to the United States, you can sell to other parts of the world, including Europe. So I'm not sure how this will shake out, but all I want to say is tariffs are not people overestimating the effect of tariffs on this business. And when asked about them on the call, they basically said usually when we feel like tariffs are going to affect our business, we see a lot of people pulling a lot of inventory forward. They said they weren't seeing that. So my personal opinion is tariffs will not affect them as much as people think they will. I think they'll be okay, but it's TBD for sure. The other thing I want to point out is they had great growth in Europe this year, 150%, in just gross merchandise volume. So one thing I've always liked about Gigacloud technology is like you're growing US, you're growing in Europe, you're going 3P, and you're going 1P. So they have a lot of opportunity for just growth going forward. And what we'll probably eventually see is just more diversified business, which is what's happening right now, and which means will mean more stable revenues and more stable earnings. So I think anyone who's willing to like sit out this bumpy ride for the next year or so will be okay. So that's just kind of like the general TDR on kind of what went down with earnings. Now, I did not like seeing this share repurchase. It was really underwhelming. They started out buying shares very aggressively, and then they basically just stopped buying them going into this year. My sense is they saw the market volatility, and they didn't want to basically exhaust their share repurchase program. So they're going to basically just slow down for the rest of the year, which is the complete opposite of what they should be doing. They should be just buying back $100 million worth of share right now because they could reduce the shares outstanding by like 15 or 20%. That's just my personal opinion, but this is a little frustrating. This is probably the biggest negative. If they had just committed to actually buying back shares, 100 million is like not even that aggressive because they're doing $30 million of free cash flow a quarter. So it's pretty sustainable, honestly. So yeah, I kind of have mixed feelings about this, but I guess it is what it is. If you're thinking about like, what should I do with this position? For me, it's just an obvious hold. It's so cheap. It's 5 times earnings. They just posted $30 million in earnings. Let's say they had 20% tariffs. Okay. So you have 20% reduction in your earnings, just theoretically. So it goes from 30 million to 25 million. It's still $100 million in earnings annually. Okay. And this is also not taking into account that they're going to have margin expansion later this year because Noble House is turning profitable and they're going to have better shipping rates. And of course, I'd also point out like winter, December and January is also like not the best time for furniture. Furniture sales are usually best when people are buying houses, and people usually buy houses in like spring and summer. I feel like summer is probably one of the bigger times when kids are out of school. So I don't know. In general, it's like a lot of tailwinds, and they're still pretty profitable overall. So for me, I got absolutely hammered today, and I will show you guys my position. This is reality with being pretty small cap kind of oriented. Is when the market is down like 1.5%, 2%, you can see I am down like 7% or something, 6.7% today. Now I did move a bunch of money out of this account, so if you see my account earlier, it's not probably down as much as it seems. But yeah, absolutely just completely obliterated by GCT today. Let's see, total open PL $6,000, and then this isn't even like correct because I actually lost another 4,000 that I realized was losses just because I had a bunch of gains this year. So I will tomorrow I will wait for the stock price to become steady, but I will sell and rebuy again just to realize these losses because I had a ton of realized gains already this year to offset those. I'm at 2,000 shares right now. My plan is if it continues to stay in these prices, I will continue to be a heavy buyer. I just like my sense with this is over the next 3 years, it will get sorted out, right? The market will become more certain. You know, Trump can only like if Trump goes to like 60, 70, 80% tariffs, dude, he's going to tank the entire economy anyway. There's nothing I can do. At that, like, I'm pretty like feel okay with the way things are now. But if he starts doing more, like, what can you do? You know what I mean? But at these prices, it's so cheap that if I do have extra money, like I will continue to add this position and I will add heavily. If this somehow goes below $10, I will just bet the bank on it. I am that level of degenerate of a person. What's crazy is it's kind of wild to me because this would be my biggest position if I didn't have such a large loss on this right now. So I've already bought like a ton of shares with GCT. But yeah, I mean, that's just part of investing, and I will commit and I'll continue to give you guys updates, what's going on in the business. So the TLDR, earnings were solid, market overreaction, guidance next quarter isn't great. The first half of this year isn't really going to probably be great, but if we can maintain $25 million in earnings, especially going to the latter half of the year when tariffs are like full force, which I think will be offset by margin expansion, we're golden. We just need $100 million in earnings to be in a good spot because guess what? We're trading at a $650 million market cap with $300 million in cash. So anytime you're kind of like panicked or worried, especially if we see some crazier swings in the year, just remember this business is very financially sound and is delivering very solid earnings. And if it makes you feel better, I got absolutely just obliterated today. So when I said it's the easiest 2x from here, maybe I should have said most obvious. It's very clear to me this business will 2x, but I don't know if it's going to be easy to hold through these downturns and whatnot. Yeah, and that's basically it from me. So if you guys have questions, let me know. I'm going to try and get in contact with management. I want to see if I can get them to do more share buybacks. So I will, if I get any word on results of reaching to management and getting answer there, I'll let you know. So yeah, hope this video was helpful, and I'll keep you guys updated on each quarter with GCT. And yeah, hang in there.